GM, welcome to the weekly outlook. We are heading into the final month of the year for markets. So let's analyze Bitcoin, crypto, the wider markets, and see what is going on because we're seeing lots of divergences. We're seeing Bitcoin downtrending. We're seeing other markets like stocks, like commodities, silver in particular, actually uptrending and breaking out. So, how can we digest this? What does this all mean? We've got December FOMC coming up, so the last opportunity for the Fed to make another interest rate decision before the end of year. So there's a lot going on. There's a lot to look at when it comes to the market. So Bitcoin, looking at the yearly chart, we've got 1 month left to go. What a year it has been. So we pushed up, we got all the way to 126K. But since then, that's been sold down into. We're now below the yearly open, so where we started for the year, which is at 93.6K. So far, the year is red. Maybe that changes. Maybe we do finish green in December, but this is overall seen as a failure in terms of the 4 year cycle, at least. People expected this year to be green and then for you to have the red year in 2026. You see that again, 2018, 2022, 2026. That's been the pattern, right? Every 4 years. And this year is meant to be one of the green years, like 2021 over here, like 2017 over here, where Bitcoin actually closes green. And we could still close green. That's still on the cards, but I think it's fair to say we're very unlikely to close, anywhere above 115 or at new all-time highs. So can see rallies, but overall seen as a failure of the year. So is the 4 year cycle breaking? Well, very potentially. When you look at the Bitcoin chart, we've mentioned it for some time, you never see the summer low get taken in this year of the 4 year cycle until now. As I've been saying for some time now, you got all of these summer lows just untapped. No one's taken them. Got another one over here. 2022 was a bear market year, so we don't count that, but you see the same in 2021. Summer low, which was over here, never got taken until 2022. So right now we took the summer low in the 2025 year. Had a bunch of distribution over here, had all the hallmarks of a top because you had crypto companies like Circle going IPO. We check this out. You can look at this chart, launched, and it's been down only ever since. Mentioned IPOs are a big sign for cycles topping out because if you're a crypto company looking to launch on the stock market, you only launch on the stock market after all your private investment has been exhausted and they get in at a fraction of the launching price. This is when retail can now buy, and when retail buy, it's time for smart money to use that as exit liquidity, right? And it's a classic. You got stocks like Metaplanet, where everyone sold all of their Bitcoin to buy this treasury company, the sale of copycats, and now they're wrecked. It's time and time again, we see this. People take their ball off accumulating long-term assets like Bitcoin, stocks, gold, real estate, whatever you want to pick, and they try essentially chase levered bets and they get wrecked if you don't know what you're doing. Tons of opportunities for traders in here, but for people who are falling for the news, falling for whatever big name out there is bullish on this, get a bunch of crappy names out there on Twitter who just shill endlessly. They end up the suckers that have this 80% plus drawdown after buying the top. Someone buys the top. For every buyer, there's a seller, right? So that's what we've seen in the market. And those conditions for IPOs and treasury companies, they only happen once Bitcoin has come way off the lows. And in this example, almost 10x off the lows. That's why they launch, because retail are back. Volumes are back. Interest in crypto's there again. So that's when smart money start playing those exit liquidity games. And that's what we've seen on Bitcoin. Distribution's played out. So the question is, where do we now see reaccumulation? It really is as simple as that when we break it down. And if you look at this chart over here, you've got Bitcoin's accumulation and distribution zones marked out. So we've had distribution over here. We know that. This is the monthly wicks over here. Monthly wicks, using that for this analysis here. So tried to hold this zone between 102 to 110, but eventually that broke with a market structure break on the weekly over here. So the low led to the most recent high, we close below it. That's then catalyzed this down move, much like last cycle. When you see the weekly low, led to the high, get closed below, we then catalyze the down move, not once, but twice in 2021. So all the hallmarks were there. Looked for this down period, but now we need to look for where are we going to reaccumulate for the up period, because we've already heavily marked down. For anyone that sold the top over here, like I did myself on August 11th at 121k, you're now looking for price to find some areas to get long, start buying. And we've done some buying in the low 80s, as you guys know, if you're in the Discord. And it's a game of patience. We have no signs of a bottom here yet. Doesn't mean we can't bounce, but this is what you want to see. You want to see cause and effect, this sideways action that leads to the markups to new highs. This is the previous accumulation zone, and that's between 74.5 and 82.5k. It's no surprise that when we've come back to this zone, what have we done? Well, we have bounced because that's a previous area of demand. You know, it doesn't take an absolute genius to see that after such a heavy downtrend, this is a likely area for people to buy. Does that mean this is going to be the peak or bottom? Not necessarily, but it confluences with the 100-week EMA. 50 EMA was the previous bull market support, but we've now lost that, which is, again, another sign that this cycle has potentially come to an end to what we know of cycles, at least. Maybe we're going to see a super cycle and something different, something that I've covered in the monthly outlook video. But we look to the 100-week because that's the next band in this weekly 50, 100, 200. That was also coinciding with this demand zone. So that's an area where we expect a bounce, but only time will tell if it actually is going to form some sort of reaccumulation and bottoming pattern like this. So if we do, then you've got the zone between 74.5 and 82.5 where you can expect some sort of bottom to form potentially on Bitcoin. If that fails, then you've got this zone between 49 and 73.7k to form a bottom on Bitcoin. I think those are the two zones where we should see that macro low get put in. Whether it's in the upper zone or the lower zone, I'm not sure. I can't tell you that, but I don't think we do go below 49k if Bitcoin is going to be bullish. I think you have to, really reassess your thesis for Bitcoin if we do start closing below 49k, because that then begs the question for some of these gaps filling here, and that's really going low to the point where it is potentially beyond recovery, because that just absolutely wrecks the chart. So I think one of these zones are the areas you want to look for. And the question is, how do we bottom? Because there's so many different ways you can bottom. One thing's for sure, if we just squeeze up from here, that is not likely to be a bottom, because markets don't often just V-reverse. They don't just go like this. I think everyone wants this to happen, which is why it exactly is not what happens. The way you actually test whether a market has demand is by, sure, maybe you can have a squeezing rally in the short term, but eventually it comes for a retest, and that shows you that demand is there. It's always the retest that proves whether something has actually gone for a reaccumulation, because that's proving the level is holding, rather than just this endless V reversal that actually looks at the bottom, because this is just more of a short squeeze. It's a FOMO rally, and people get too leveraged long. There's no reaccumulation after the distribution, so smart money aren't on board, and that's why you just see this as a very unlikely scenario. And if we don't squeeze up, then again, you're just looking at, can we go sideways and hold this first box as your reaccumulation zone for higher? Or if we do need to actually continue marking down, maybe it's this lower zone that ends up providing some sort of reaccumulation area. And the key common factor in all of this is time, right, guys? It's time going sideways, spending this extended period of potentially low volatility, so boring markets. This was boring markets for the most part. And especially when you come back to some of the earliest reaccumulations, this was extremely boring markets. Like retail were nowhere when Bitcoin was going sideways for 200 plus days over here. But it's that 200-day plus consolidation that leads to the big markups, right? Smart money buy during these sideways periods. They accumulate as much Bitcoin as possible. They don't let the price break out. And then eventually, when the accumulation is done, you can mark up. And that's what gets these big rallies, cause and effect. 200-day consolidation leads to an extended rally. It's not just a phenomenon in Bitcoin, guys. If I show you gold, for example, one of the best examples of this. Well, gold reaccumulated sideways for actually multiple years. That's why it's one of the best performing assets right there. What is this? This is all reaccumulation on gold. When everyone was bored and saying gold doesn't move and memeing gold, that's what people were doing here because retail aren't excited here. Gold was just going sideways for over 1,200 days. And that's why gold has been the best performing asset this cycle. It's cause and effect. It really is that simple. And cause and effect works on all time frames. This is the monthly. Within this rally, you then have mini consolidations like this over here. This is again cause and effect, reaccumulations within the uptrend. This again, cause and effect, reaccumulation within the uptrend, reaccumulation within the uptrend. And that's led to new highs each time. And it's the same for Bitcoin. It's the same for every asset. This is just how markets move. It's not emotional. It's how price action works on the high time frames in accumulation and distribution. So what we've actually seen on Bitcoin is some distributing, as we've said up here. Like these zones over here were actually the opposite of accumulation and led to markdowns. So this is actually when selling is going on. We need to wait for another one of these moments where we have this sideways box that does lead to reaccumulation, something like this where we go sideways, cause and effect. Because only when the smart money is sold up here, start buying back, can we actually then form those big high time frame bottoms. So it's a game of patience, it's a game of time. Now that doesn't mean you can't be long and looking for longs, even if overall you're still waiting for more signal for high time frame bullishness. As traders, we trade the charts as they are, and that's why I said, yes, this is still a demand zone where we expect a bounce, and we've had that bounce so far. But am I calling this a high time frame bottom yet? No, we still need to wait. We need more time. Can this rally to 100, 110 and still not be a high time frame bottom? Yes, that's the thing. That's why we're in a market where you have to exercise that patience and simply just wait. So that's what I'm looking at in terms of Bitcoin. Let's wait for accumulation before we start calling for a high time frame bottom. Doesn't mean we can't do some buying, as I've been giving you updates on my portfolio. We've been getting ourselves 25% allocated to Bitcoin now. But in the meantime, we can trade the levels as they come. So zooming something out the daily, what we saw here was a high volume sell there. So that's why I'm waiting for a retest of this general zone to see, okay, is there actual demand here when we come back to this level? If so, then maybe we can look for some extended rallies going into next week, and that can produce some lovely long setups. Maybe we get some sort of higher low, or we're looking at a scenario where we get a sweep and then bottom out. This is what I'm looking for to see price go on some extended rally, because right now it's end of the month, and a phenomenon I've been talking to you guys about a lot is as you go into the end of the month, so end of November, you often see rallies. And the reason for that is because your everyday person typically gets paid on the last day of the month. At least this is the reason I think it happens. So smart money, the most sensible thing for them to do is to mark up price, bid up price, because they know on the last day of the month, there's a guaranteed buyer. People who just set their monthly orders as soon as they get paid, it is exit liquidity. And then you see at the start of the month, like we're getting right here, the actual sell-off to begin, because now you give them max pain, all of the retail they bought on the last day of the month, and now you can flush price down a little bit. And overall, you don't even need to apply that context. That's just something I'm seeing in the markets over time on Bitcoin, but it's simple really here. Daily bands, we are currently rejecting them again, as we have been before. So until these daily bands actually do something different, like going green, as they have over here, so this is the 12 and 21 EMA bands, until they actually flip green, which gives you these beautiful rallies, especially if it flips green after reaccumulation. That's your best signal, right? Like over here. That then led to new all-time highs. Until you see that, they're currently red right now. So we're in a downtrend. It's as simple as that. While yes, we are at a zone of previous reaccumulation, and this could be an area where we do bottom out, we still need to wait for the triggers on our trading systems to do so. And the triggers for me is not getting long on a V reversal, because it's the most unlikely reversal pattern. As I said, it's going to be looking at this zone over here to see, do we form a higher low in this zone and test it as demand, or maybe we get a sweep and reclaim. That's then when I can look for some sort of extended rally, and likely the daily bands will eventually flatten out and flip green in this scenario too, which will give you more confluence for a rally. But at the same time, you could also just crash through this level. That's why we need to wait. And I'll be diving into this further in Trade of the Week, so make sure you stay till the end. But that's what I'm looking at on BTC, because when you have these large wicks, October the 10th over here, even if bearish, retest the wick, has some demand, tries to push up. And the fact that it then closes below is your biggest sign of a markdown coming. You get a markdown, then that follows over here. But to show you bullish examples, you had this tariff craze on this day. This is when tariffs got announced and got put into effect. 2 days later, you retested this zone, and that was the Pico bomb, led to the markup higher. Many other examples, Japanese yen carry trade fears over here. So notice how it typically comes with a catalyst. That's when you get the forced selling that leads to Pico bottoms, because people who sell, buy and sell based off news are your lowest form IQ wise of traders and investors, your least informed trader. They're your absolute dumb money, and that's why it actually creates those bombs, because they panic sell out of the market and that gets given to stronger hands. But even on the rally, that gives them the max pain after they sold all their Bitcoin at 49k, and then they see it rally to 64 just a couple of weeks later. Even then, it still comes back for a retest, and that retest is what again proves the demand, shows that okay, Bitcoin doesn't want to trade in this zone, and if it doesn't want to trade in this zone, it's going to go higher to find a supply zone instead of the demand zone. That's how markets move. They're here to facilitate trade, so they go to an area where trade wants to take place. And in this zone, trade didn't want to take place. That's why price barely accepted here, moved higher, and that told you price is actually more likely to go higher because it's showing very strong demand when it tries to push down. So then it needs to find an area of supply where it shows strong supply, and that came over here. That's where the distribution then came in. You had Trump get inaugurated, big news candle, swept the high, so you see the exact same thing except to the opposite over here. Big wick, big news event, wicking the high, respecting it, can't close above and break out. That then leads to distribution and your mark down. So it's again exact same concept to the flip side. This wick gets retested, can't close above it, leads to the markdown. So looking at that by the same nature in this purple box over here on this big capitulation day on Friday. The thing is, we didn't have a big news event that really forced sellers out, and it also closed red, so that's why I'd be more inclined to think this is going to be just for short-term bounces if we do trade it. I don't think high time frame bottoms are most likely to be forming here. Could be wrong. Again, just got to wait for cause and effect and a time to prove that, whether that's true or not. But for now, it is still an area where we had capitulation, maybe not a Japanese yen carry trade fear, maybe not a tariff fear, but there still was a big event that forced Bitcoin holders out of the market. So interesting area between 80 and 85, and of course the sweep, which will be around 79 if we do have a quick wick down instead and form that reversal pattern. So that's what I'm looking at when it comes to Bitcoin. And when we look at the wider market, what have we seen? So take a look at total 2, so everything excluding Bitcoin. You've really had this distribution zone since last cycle. That's been the distribution zone this cycle. So altcoins, they failed to make a new cycle high. They haven't had the same craze as they had in 2021. And I put it down to the simple fact that in 2021, people generally believed altcoins are potentially going to revolutionize the financial system. People simply, at least if they didn't believe that with certainty, there was a what if. There was a 20% chance maybe it does. But now that chance is more like a 2%, 3% chance right now, maybe 1%. And the markets have shown that because none of these altcoins have actually gone and done anything really useful. They haven't actually lived up to any of the promises and expectations from them back in 2021. People were talking about decentralized blockchain. People were talking about layer ones revolutionizing everything, revolutionizing the stock market. And while blockchain technology is useful, the problem is the coin attached to the blockchain often doesn't have any use. You see coins like Ondo, they have a great business, but the Ondo token itself does nothing. And you have this phenomenon popping up really everywhere in crypto, and that's why this cycle, what ran the hardest? What went crazy, guys? It was memes. And this was almost your biggest tell that the markets are changing, something's different's happening, because traders in crypto are no longer respecting the altcoins, the utility coins as they call it. They were actually marking up the jokes. Is that not the biggest signal in itself that the final stuff, the absolute low caps, the penny stocks, if you were a stock market trader, the equivalent of penny stocks marking up, is that not the sign of that final exit liquidity almost the end? Potentially. And is it going to be the end of altcoins? I don't know. I don't particularly care because price will always show it. And when we look back to price, what have we seen? Well, distribution at the previous cycle highs. That's where we topped out every time this cycle. We've seen reaccumulation over here. So these zones are where demand has come in, led to the markups, retested it, led to the markup. So do we see demand come in if we come back to this level? That's the question. Of course, you've got this important October 10th level. It's big liquidation day. If you see price trading below that, that's not going to be a good sign, because that shows that this liquidation, which took out a bunch of longs, bunch of bulls, if we're trading below it, that is not a bullish liquidation, of course. That's not just taking out the weak hands, right? That's a shift in the markets when you then start trading below it. So I've watched this level carefully in the coming weeks to see if we start getting weekly closes below there, then I'd expect price to move to this reaccumulation zone. If that can't hold, then the next zone is actually at the bear market reaccumulation over here. So that's how you can clearly see the big difference between altcoins and Bitcoin. Their second reaccumulation zone is actually the bear market lows, which is like the equivalent of the 20s in Bitcoin. So zones in between, that can definitely hold for sure. But below there, this is your main demand zone, which is between 292 and 573 billion on this chart. Of course, you can't trade this chart, but this gives you the gauge, the index for all of your altcoins. And you got these key pivot levels like the March 2024 high, you can see. Close below there leads to the markdown. So by that same nature as a bull. And the way I'm going to do it as a trader, I'm not writing off altcoins, but it's just simple. Close above here, then can I not just look for longs as soon as you get the signal, the show of strength like we have over here, and then trade the rest of this move like we have over here, and then again, trade the rest of this move? That's what I'd rather do. I'd rather do that rather than trying to long a falling knife over here and just hoping price is going to bounce. And really it is just hope, because weekly bands are red. Price is clearly going against you if you are on the long side, and especially if we're below this October 10th candle, it's a real show of weakness as a big bearish shift. So when I'm looking at these altcoins, I want to see some sort of show of strength above the March 2024 high to invalidate this bearishness. Otherwise, I'm expecting moves back into these reaccumulation zones where it's the same as Bitcoin. You got to see cause and effect. You got to see these lengthy reaccumulations that show smart money are actually buying up the supply, and that leads to your markups. It's very simple. We've had the distributions, we've had the selling, so now we need to see some of the opposite. And if you see smart money returning, it's not going to catch up on you. This is 546 days to get positioned and prepared. I was around, I was buying altcoins back then, and this is what actually gives you your biggest opportunity, is what they call the bear market, but it's actually just the reaccumulation after the markdown, and that leads to the markup. So don't have to guess. You can be patient when it comes to these coins, is the moral of the story. And a lot of guessers, there's a lot of DCAers who just hope price bottoms out, and hope is not a trading or investment strategy. When we look at total free, so everything excluding now Bitcoin and Ethereum, again, distribution zone 2021 cycle, that's been where we've sold off from. That's occurred on 2 occasions here. This is the demand zone between 450 and 561 billion. That's where we previously found buyers to show up. But the problem now is you're just testing it for the first, second, third, and now this would be the 4th time. And the more you test support, the weaker it potentially gets. So then that has my eyes towards this lower reaccumulation zone, this big liquidation wick, and of course below there and within there is really this bear market reaccumulation over here. So similar to that total 2 chart, you're looking at these zones below and just waiting for, when do we get a sign of cause and effect? Price going sideways, that leads to the markups. Or at least, when does price come back to one of these demand zones and actually show some sort of sideways action and bottoming formation? Maybe it's like that. Maybe we need to actually mark down to these lower levels. Maybe it's like that. Again, what is all of this? It's cause and effect, it's sideways price action. It then breaks out. That shows you markets are actually ready to uptrend. But right now, bands are red. So simply, even from just an EMA perspective, while the bands flip green, that's the time you want to be looking for longs. While they're red, you want to be cautious or at least neutral. And then while they're green again, you see it goes into its big markups. Red, not much happens. You get the reaccumulation, the boring price action. So can have opportunity in here, good risk to reward. But when it's green is when you have the markups. And red, problem with red is that's when you can also have these big markdown periods. That's why, unless you're seeing cause and effect reaccumulation, it's not a high risk to reward area because you could just keep going down. This is just a falling knife. So that's what you're looking at in terms of the altcoin market. And of course, the altcoin market is interesting and strange, at least for traders, because they just can't understand why stocks are at all-time high. They keep mooning, and why is this not risk on for altcoins? And it's because it's a different market right now. Markets led by AI. You've got Apple breaking out to a new all-time high on this weekly close. You've got Nvidia, biggest company in the world, near all-time highs, having a sell-off now, but right up there. Of course, doesn't look like an altcoin chart, which has been absolutely wrecked. It's actually retaining its uptrend. You've got Palantir, so another AI stock. This is in an uptrend. Notice how this is visually different to Bitcoin, visually different to altcoins. Weekly bands are green. They're bullish. Whereas weekly bands on Bitcoin and crypto are all red. They're not in the same market right now. Stocks are simply in an uptrend, and Bitcoin and crypto are in a downtrend at best. If not, you can say sideways potentially, but really they're all in downtrends or maybe coming to the end of a downtrend. It's completely different. It's not the same market. And in uptrends, you want to bid the dip. So bidding the dip on stocks has been valid, but on Bitcoin, on crypto, we need more confirmation. Of course, you can trade low time frame, trade your systems, that's fine. But for higher time frame, you want to still exercise some patience, because you're seeing things like gold now potentially recovering. So cause and effect on gold. It's coming back towards the highs here, which we know gold, of course, when it rallies, it's typically when Bitcoin underperforms. So I'll be watching these levels carefully. This high over here, do we close above there on gold this week and in the coming days? And of course, the all-time high. So if gold rejects this and then comes back down, that's when you're probably going to see Bitcoin allowed to have some sort of extended rally, some extended squeeze. And you can see the same at all-time high. If it comes to the all-time high, you're probably going to see initial underperformance in Bitcoin. But once that tops out, then that's when you can see Bitcoin actually have its own bit of outperformance. But if gold is just going to continue marking up, and maybe it is, you really can't write off this chart, that's what it's told you, then this is not going to be the time when Bitcoin performs. Bitcoin performs when gold goes sideways. Many of you guys will know this. So get the Bitcoin chart up and show you. You can clearly see during these sideways periods, so when gold went sideways over here, this is when Bitcoin marked up from 85 all the way to 111 while gold did nothing. And then when gold breaks out over here and goes on its trend all the way above 4.4K, well, that's when Bitcoin topped out. Right over here in this same period, this is where Bitcoin distributed and has led to the sell-off. So that's why you're watching gold carefully now to see, do we reject and continue sideways? That can potentially lead to Bitcoin bottoming out and having something rally. Or does this actually now just mark up and break out to new highs? And that's going to be price action based, as always. Again, you're watching these key levels. Close above this level over here, so 4245. Then you're looking at continuation higher and bearishness for Bitcoin. Close above the all-time high, again, looking at continuation higher and therefore bearishness for Bitcoin. Sweep and reject these levels, then potentially you can see some more relief rallies on Bitcoin. So that's what I'd be looking at in terms of Bitcoin, stock market, and commodities. Of course, silver's breaking out, which does definitely show that even commodities are getting later and later in their bull cycle that they've been having in these last couple years, last few years, because silver's now running really hard, which is only occurring after gold has now rallied. So it's definitely like a rotation. And we know rotations are a form of exit liquidity, much like Circle IPO I showed earlier and the Meta Planet Bitcoin Treasury Company. Once you mark up Bitcoin, you then rotate to the higher levered assets or higher beta assets. And once you mark up gold, you now come to the higher beta, higher levered asset like silver. So now we're seeing silver mark up above 50 after being below it since 2011. So over a decade of no new all-time highs. Now we're breaking above. how high is this rally going to go? And what does it signal? Well, it signals again stocks, commodities, they're in an uptrend. Dip buys are valid. But crypto, you cannot say the same thing. And eventually that will turn, that will end. But it's these weeks, these months where you have to lock in crypto, lock in on Bitcoin. Don't check out while they're underperforming, because that's when actually you get your best discounts, your best offers, and when smart money like to turn up and steal all the weak hands coins. So that's what you're looking at in terms of the markets. That is the simple reality of the markets right now. Bitcoin has topped out, but it's going to take some time if we're looking for a high time frame bottom. That doesn't, however, mean we can't have rallies in the meantime. But that's what I'm looking at in terms of Bitcoin. I'm looking at some lower time frame charts. And what we're already seeing at the beginning of the month, as I said, we started December here now with a flush, as expected. So as I'm recording this video, that's already been playing out. As I mentioned earlier, you often see start of the month, you flush out that end of the month rally, where retail buy on that last working day. And you're already seeing this now. So if we start accepting in this gap, as I mentioned, this 4-hour gap, closing within it, then I think we're likely to actually see one of the potential setups play out, because we're coming towards this 100-week EMA, which can be a good zone. We're coming towards the lows where if we retest it and see demand, that can actually form a nice bottom, and is why I'm looking for actual longs on Bitcoin because of all those signs. And I'll dive into that more on Trade of the Week. So without further ado, that is your high time frame market analysis. Let's dive into the leverage positioning next up. So looking at Bitcoin over here, what are we seeing? Well, we're seeing open interest has actually been declining on this rally since the low that we put in on the 21st of November, Friday. So what does this mean? This means this rally is really just a short squeeze. It's not new positions pushing the market up. It's shorts who should be taking profit doing exactly that. And when they take profit, it's a buy, and that leads to the market going higher because you're seeing positions close out on net. So that means longs and shorts on net are actually exiting the market. And if the price is pumping, that means it's a short squeeze. It means shorts are getting out. That does not indicate real demand, which is again another reason why I've been mentioning to have patience. V reversals are less likely. They can happen, but they're less likely. You're always going to be more likely to see a retest of the lows, whether that's again high, low, or a sweep. And maybe we just continue down as well, which is why we wait for that retest to show demand, because there is no demand as of yet. This is open interest declining and positions still exiting on Bitcoin. And we need to really just have patience in this market right now. Since October the 10th, we had a massive wipe of leverage. Positions then rebuilt in the downtrend, but we know that was hedges and shorts. That was people trying to hedge their long exposure, which maybe they were offside on Bitcoin, or maybe they bought way earlier. Overall, they're looking at a risk-off approach on Bitcoin. That's led to this down move. So, with this short squeeze, this rally over here, there's a lot more Bitcoin needs to do to actually form some proper base, proper platform for a more extended rally. And that's what you need to see. Not only price showing it, but also positions reaccumulate and this not just be a short squeeze. So open interest further confirming that this rally is just shorts getting squeezed. So do we find demand on the retest is now going to be the all important question when it comes to leverage positioning. So catalysts and risk. Let's dive into it. So December FOMC is coming up. There is actually an 87.4% chance of a rate cut now. So you guys will know if you've been following, this has been really jumping quite a lot. It was 50-50 a few weeks ago, which, was a big reason catalyzing some of the down move, or at least people say. Everyone wants to assign reasons. Again, price action is always most important. But now it's changed again. So indecision in the markets, people don't know what's going on. You've got economic data not really being released. Still loads of uncertainty, and risk assets, they don't like uncertainty, especially Bitcoin doesn't like uncertainty. Yes, there's now almost a very high likelihood, at least, that we're going to see another rate cut in December, and we're going to get those 3 rate cuts that were predicted some months ago in 2025. But we know that rate cuts, especially on Bitcoin, have actually led to downtrends. They led to breakdowns. You see the September FOMC and October FOMC has led to these sell-offs on every single rate cut decision. Stocks have been a little bit different. So they sold off from the October rate cut, but they did rally from the September rate cut. So stocks are neutral. Bitcoin bearish in reaction to rate cuts, whereas gold rallied on the September interest rate cut, rallied on the October interest rate cut. Dollar rallied on the September interest rate cut, rallied on the October interest rate cut. So if we get an interest rate cut in December, the question is going to be, do we see more of the same? Do we see Bitcoin reacting bearishly to it, stocks potentially neutral, and gold and the dollar react bullish? If so, expect more of the same. But the biggest signal will be if we actually get something different and we finally see Bitcoin's actually having a bullish reaction to a rate cut, and you're seeing gold and the dollar, especially if they have a bearish reaction to it, that's a change of character. That will mean people are expecting the same pattern to occur and they're wrong, which means positioning is off, and that can actually lead to your biggest signals in the market that something is changing, and the undercrowded side is now the opposite. So I'll be watching December FOMC closely, watching if we get continuation of this pattern or actually the opposite. So looking at Bitcoin in particular to see how it reacts to the next rate cut. So far it's been bearish, so expect the same until you see something different. And we've had these risk off markets like the dollar, like gold, rallying off these interest rate cut decisions. So it's a further sign of where we're at in the markets. We've rallied off of high interest rates all cycle. Could you say that's because these rate cuts have got priced in advance? Markets are forward looking. Yeah, that's one explanation. Could you say that this cycle's just been a flight to safety and people have been coming to the bigger assets like your Bitcoin, like your stock market, like your gold, and less so your lower cap stocks, less so your altcoins? Yeah, that's also another way to explain it. We've not had easy liquidity. We've not had easy money printing mode like 2021. We've had lots of wars, lots of tension. The whole world is polarized at the moment when it comes to the political landscape. It really has been a flight to safety all cycle. So many ways you can look at it, but the simplest way to look at it is price action first. How does Bitcoin and these other assets react to the December rate cut? When it comes, is it more of the same or do we see a change of character? So that's catalyst and risk coming up. Now, trade of the week. So what you've been waiting for. This is a setup that I detailed to you guys in the Discord a couple weeks ago. It's not played out yet, so I still think the idea is valid. Got the 100-week EMA in red here, the 50-week EMA in purple here, liquidity at the lows here. So what I'm looking for is the pattern where if we lose the 100-week EMA and then reclaim it on a 4-hour close, that would be, I'd be looking for potential long setups. That's scenario one. And scenario two is, again, looking for the same idea, except potentially we get a sweep of the actual low, the liquidity here. And if I then see the 4-hour reclaim, that's when I want to be, again, looking for longs, trading this as a retest. And if demand is showing, then that can set up a potential bottom, at least for a rally. Don't know if it's going to be the peak or bottom or not. That'll be shown through whether we reaccumulate or not, cause and effect, as I mentioned in this video. But until then, I still think longs can offer the best setups around these key confluence levels, around the reaccumulation demand zone. Many signs here, especially with that Friday big wick capitulation candle, that we can at least see some extended rally, maybe to the 50-week EMA. But everyone got allocated end of the month. They FOMO'd in this short squeeze, which has been up only. All of this liquidity hasn't been taken. So what I want to see is everyone get bearish as we come back into the 100-week EMA. Maybe we lose it and reclaim it like the green path. Maybe we go to the local lows and reclaim it like the blue path. Overall, if I see people getting scared, bearish, and price fail to go lower and put in one of these bottoming formations, that's going to be a sign for me for a really decent long setup that I want to take. So that's the logic behind it. That's the two scenarios. Not sure which one we get. Maybe we get both. Maybe we get none. Maybe we just break down. But that's the trade I'm looking at. It's on the long side. I think that's what offers the greatest risk to reward. And of course, if we do just continue going lower, that's why I still have cash on the side. 25% in Bitcoin, 75% cash at the moment. You guys will know in the Discord, we've done some buying in the low 80s. So if these paths don't play out and we don't bottom and we do just continue lower, I'll just do some more allocations on the high time frame. So plans are in place for all scenarios. That's how you got to be as a professional trader. so that nothing surprises me. I'm prepared whatever way the market goes, and that is how I am going to be playing it. So guys, if you enjoyed this video, drop a subscribe, turn that bell on, drop a like, drop a comment so that I know you valued it. I read all your comments. Get yourself inside the school if you're not already in, and I'll see you guys in the next one. GM.